Hello, and welcome back to Market Visionary. In today's analysis, we'll dive deep into American Tower Corporation, one of the largest real estate investment trusts REITs globally, focusing on its impressive dividend growth, robust business model, and why it may currently be undervalued. Whether you're an income investor or someone looking for a long-term growth opportunity, this video is packed with insights you don't want to miss. Let's explore why American Tower deserves a closer look. Hey everyone, welcome to Market Visionary. I'm just starting out and I need your support. If you're enjoying this content, please hit thumbs up and subscribe. As a thank you, I'm offering gifts to my early supporters. Just comment, subscribe, take a screenshot, and email it to the address in the description. You might get a special reward. Thanks for being here. Let's grow Market Visionary together. Overview of American Tower Corporation. American Tower Corporation, AMT, is a $94 billion giant in the world of real estate investment trusts, with an extensive portfolio of nearly 150,000 communication sites across 25 countries. The company specializes in owning and managing broadcast and wireless communication towers. Its business model is straightforward: build or acquire communication towers and lease space on them to tenants, such as mobile carriers and broadcasters. American Tower has also ventured into data centers through its acquisition of CoreSite Realty Corporation in 2021. This move positions the company to capitalize on the growing demand for edge computing and cloud services, although data centers remain a relatively small part of its overall operations. Dividend growth, a consistent performer. One of American Tower's standout features is its impressive dividend track record. The company has increased its dividend for 14 consecutive years, boasting a 10-year dividend growth rate of 19.1%. While recent dividend growth has slowed to 4% in 2024, the company's yield has risen to 3.5%, significantly higher than its historical average. Here's what makes American Tower's dividend policy noteworthy. Quarterly increases. Unlike most REITs that raise dividends annually, American Tower has historically increased payouts every quarter. Sustainable payout ratio. With a payout ratio of just 61.5%, based on adjusted funds from operations or AFO, the dividend appears well covered and sustainable. Even as dividend growth moderates, the current combination of a solid yield and strong historical growth makes American Tower a compelling choice for income-focused investors. The growth story, a decade of success. Over the past decade, American Tower has delivered remarkable top-line and bottom-line growth. Revenue growth. Annual revenue grew from $4.1 billion in 2014 to $11.1 billion in 2023, a compound annual growth rate (CAGR) of 11.7%. AFO per share. Adjusted funds from operations (AFO) per share, a key metric for REIT profitability, rose from $4.54 to $9.87 during the same period, reflecting a CAGR of 9%. This level of growth is impressive for a REIT and underscores the company's ability to capitalize on global demand for wireless infrastructure. However, growth has slowed recently, with AFO per share increasing by just 2.3% year-over-year in the latest quarter. Strategic moves, focused growth, and optimization. American Tower has made several strategic decisions to sustain growth and optimize its operations. 1. International expansion. With 67% of its sites located outside the U.S., American Tower has prioritized growth in regions with lower mobile penetration, such as Latin America and Africa. These markets offer significant long-term opportunities as 4G and 5G adoption increases. 2. Exit from India. In 2024, the company sold its Indian operations for $2.2 billion. The move reduces exposure to high-churn markets and allows American Tower to focus on more profitable regions. Number 3. Debt reduction. Proceeds from the India sale are being used to deleverage the balance sheet. The company's net debt to EBITDA ratio is currently 5.2, within a reasonable range for REITs, but management aims to reduce it further. 5G and IoT. Tailwinds for future growth. The convergence of 5G technology and the Internet of Things (IoT) has created a perfect storm of demand for high-speed, low-latency wireless data. American Tower's infrastructure is critical to enabling this transformation, supporting everything from AI-powered devices to self-driving cars. Key trends driving growth include Increased data consumption, mobile video, cloud applications, and IoT devices are fueling exponential growth in data usage. Telecom upgrades. Mobile carriers are investing heavily in 5G networks, creating demand for more tower space and equipment upgrades. American Tower's ability to lease space to multiple tenants on each tower further enhances its profitability, turning each site into a compounding revenue generator. Valuation, an undervalued opportunity. Despite its strong fundamentals, American Tower's stock has suffered a 35% drawdown from its all-time high. This has brought its valuation to attractive levels. P/AFO ratio at 18.5, this multiple is well below the company's 5-year average, suggesting the stock is undervalued. Dividend yield. The current yield of 3.5% is significantly higher than its historical average, making the stock more appealing to income investors. Using a conservative dividend discount model with a 10% discount rate and a long-term dividend growth rate of 6.5%, the estimated fair value is approximately $197 per share. This implies a potential upside of over 12% from current levels. Risks to consider. Like any investment, American Tower comes with its share of risks. 1. Interest rates. Higher interest rates can increase borrowing costs and make REIT yields less attractive relative to fixed income securities. 2. Customer concentration. Half of American Tower's revenue comes from just 3 telecom giants, AT&T, Verizon, and T-Mobile, posing a concentration risk. 3. Technological obsolescence. Low Earth orbit (LE) satellites could emerge as an alternative to tower-based infrastructure, though this technology is still in its infancy. Despite these risks, American Tower's global scale, durable competitive advantages, and diversified revenue streams provide a strong foundation for resilience. Why American Tower is a long-term buy? American Tower's combination of income generation, growth potential, and attractive valuation makes it a compelling option for long-term investors. Here's why. Reliable dividends. A strong history of dividend growth, backed by a sustainable payout ratio, ensures consistent income. Global reach. Exposure to high-growth international markets offers significant upside. 5G and IoT tailwinds. As a critical enabler of next-generation technologies, American Tower is well-positioned for future growth. Conclusion. American Tower is a prime example of a company that balances stability and growth. While near-term dividend growth may be subdued, the company's long-term prospects remain bright, supported by strong demand for wireless infrastructure and strategic operational improvements. At Market Visionary, we believe American Tower's recent pullback offers an excellent entry point for investors seeking both income and capital appreciation. What do you think? Is American Tower a buy at current levels, or are you waiting for more clarity? Let us know in the comments below. Don't forget to like, subscribe, and hit the notification bell for more in-depth analyses and investment insights. Thank you for watching, and we'll see you next time on Market Visionary.